And look who's on the phone now. Our very own Keith Fitz, joining us from the West Coast. Another guy who has frequently been bullish, but recently, I think I'm right in saying recently, you have turned much more cautious and you're prepared to say, watch out and sell some of the stuff that looks shaky. Is that where you are today, Keith?
That is absolutely correct, Stuart. I think we're on pace for the fifth straight weekly decline with the S&P 500. We're trading briefly, at least this morning, below the lows hit earlier this month. That tells me traders are, to your point, orderly exits, but there's still some downside to go.
So look at me, for example, and I've asked this question to everybody else. I got some money in Microsoft. I've made very good money in Microsoft. Should I sell some of it or all of it?
Well, here's the thing, Stuart. Number one, I can't advise you personally because obviously that'd be bad for me, and I don't fancy a trip to the Gray Bar Hotel. But here's the thing. Any investor in a situation like that has to ask them two questions. Number one, is this a stock I want long-term, and do I have the financial wherewithal to hold it through a downturn like this? In most cases, the answer is yes. People get too nervous, they sell too quickly, and wind up missing the opportunity that comes out the other side. I have no idea when this is going to stop, but that's a function of traders and the leverage they carry on the big institutions. The individual investors, believe it or not, have a tailor-made opportunity at times like this to add to those positions because they have a different personal perspective on where the market goes. There's no doubt in my mind, for example, that Microsoft is going to be higher in 5 years than it is today. Okay,
put yourself in the shoes of some of our viewers. They've made some money.
Yep.
And it will be, you have to have a very strong stomach to jump in and buy more now. I mean, am I going to buy more Microsoft now because it's down $3.43 a share? Have I got the stomach for that? I'm not going to answer my own question, but you put yourself into the shoes of people like me and like our viewers. It would take a very strong, determined person to jump back in this morning, now, and buy more, wouldn't it?
Oh, yes, it does. And, I do this all the time. I talk to my folks all the time, and we have several million folks for whom emotions are the single biggest anti-determinant of performance, meaning it's what holds them back. And if we think about how the stock market works calmly and rationally, buy low, sell high, that's the game. So stocks that are normally overvalued, and we talk about that all the time, suddenly go on sale. You want to go to the store, not run away from it, because what happens inevitably, history is very, very clear on this, is that then the markets start to run, and all of a sudden you got two problems. You've locked in your losses, and you can't get back in because you've lost the gumption to do so. So this is all about discipline. It's all about psychology. I think today might be a little early to step in. But again, if you've got the right perspective, Stuart, there's absolutely nothing wrong with buying a little. You don't have to buy everything at once. That's the mistake a lot of other investors make. They think, I got to be all or none. But that's not the case. You can step in a couple shares at a time.
Looking across the spectrum of the people that we've had on our program, a lot of them are saying that if you look at the fundamentals of the economy, growth, employment, wages, interest rates, and above all, profits, we will get a bounce back. What do you say?
I agree with that, but the market is not a rational place right now. What you're seeing is exactly what we talked about. We've got fears surfacing in corporate earnings calls about tariffs, about tighter global trade conditions that slow down the global economy. That's CEO talk and buzzword bingo for the most part. And so the individual investors need to concentrate on what is important to them and their unique financial perspective. And companies like that, based on the fundamentals, I submit, are going to get stronger over time, not weaker.
Keith, thanks very much for jumping in on the phone like this. We needed you today, and we appreciate you being here. Scott Shellady, same story. You've been sitting in front of that camera over there in London for an eternity. We appreciate it. Thank you very much, gentlemen, one and all.